Good day everyone, hope you're well, hope you enjoyed the previous videos. Today I'm going to show you one or two examples on how I analyze the boom and the crash markets. Today's pair is going to be Boom 1000. I am following ICT concepts on these markets. I'm not trading on the 1 minute. I'm not using any fancy indicators to see if I can catch one or two spikes. I'm looking at the bigger picture to take more profit. Alright, so there's a few rules that we need to keep in mind before we enter a trade. We need to wait for a liquidity sweep, a market structure shift, fib below or high to 50%. It depends on which market you are, discount or premium. I always enter from an order block or a fair value gap, and I always target the opposite liquidity. Alright, so let's look at this market. The first thing that we see is the market came down. You will see here the market retested on an order block. We had a little bit of an impulse move. Now I would mark out this order block, so I'm expecting price to either take this liquidity here or react from this order block. Now there's a few things I look for. I look for liquidity sweep, market structure shift. So let's start there. So as this was playing out, right, we know this is an order block, so we anticipate either for price to take out this order block for liquidity sweep, or what we can see in the market, here are there's equal lows here as well. Now that's a good point of interest for me to say, alright, there's a lot of liquidity down here. There's a lot of liquidity down here. Awesome. So impulse move, there's a lot of liquidity. Liquidity has been swept. As it swept liquidity, it tagged in the order block. Now remember, we have not entered a trade yet. We're waiting for market structure shift. There we go, market structure shift. Now there's a huge impulse move. Now our next rule is we need to enter in the discount area. So what we do, we draw our fib from this low to this high. So I'm only interested in taking a trade below that level. So anywhere below the 50%, I would be taking a trade. But I also, like I said, I only enter from an order block or a fair value gap. So now, alright, which order block do we use? Which fair value gap do we use? Alright, so we can see there's an order block, there was a low created, there's an order block, there's an order block. I like to choose the one where the impulse move started from, the one that broke the structure, the one that created the market structure shift. So if I take the one that's the most probability trade for me, it's going to be this bottom one. It's going to be this bottom one. Alright, so I'm marking the order block out. Price do what price needs to do. I'm waiting for the order block, and to confirm this order block a little bit better for me, there was a low created here that created liquidity. So price is coming down. Now it's in our discounted area. We're waiting for liquidity to be swept again. Order enter from this order block here. I put a buy limit on this order block. Stop loss just below this low that created the impulse move. And where do I target? I target the next level of liquidity. That would be, yeah, target next level of liquidity. And as you can see, enter the trade, really small stop loss, risk to reward, 8 risk to reward trade, and beautiful trade TP hit. Alright, let's look at another example. Alright, here's another beautiful example. The first thing we look at is for a liquidity sweep. So as we look at the markets, we can see yes, equal lows here, equal lows here. So I would mark that out. Liquidity. Alright, so now we can see price has swept liquidity. Here it swept liquidity. I'm not going to use this as my market structure shift. For me, this is the significant high that created this impulse leg. So I'm going to use that as my market structure shift. Alright, so if price breaks this level, I know, alright, we are moving to the upside now. And I'm only trading boom with the trend, not against the trend. So I don't take sells, I only take buys on boom. Alright, so it's liquidity swept, market structure shift. Now what's our next rule? Our FIP needs to be below the 50%. So we are looking for trades from this area all the way down. So that's where we need to look trades for. Now, what do we look for? We look for a fair value gap or an order block. Now, here's an example of both. Now, alright, why don't I use this order block here? Because as you can see, the order block that created this big impulse move, which one was it? Was it this one, or this one? I see it's this one. Do you guys agree with me? This order block here. Now, what's nice about this trade that's a little bit more confluence, there's a nice fair value gap as well. So you can either enter from the fair value gap at the top of the fair value gap, middle at the 50%, or you can enter at the order block. Alright, so let's say you've entered on the first alright, so let's say you've entered on the fair value gap, stops just below the candles that created the fair value gap. So fair value gap consists out of 3 candles, 1, 2, 3. My stop loss would be below that low, this one here, and I will target the next level of liquidity, 3.74 risk to reward trade. If I entered from the 50%, more about from the fair value gap, your trade goes from 3.74 to 5.09, and if you entered from the order block, your trade is a 7.17 risk to reward trade. So let's quickly recap this one. Liquidity was swept, market structure shift, big impulse move that broke the structure there. Draw our FIB level. We want to enter below the 50%. We have a fair value gap and an order block that created this impulse move. You can either enter at the top of the fair value gap, middle of the fair value gap, or the top of the order block. And where do we target? We target the next level of liquidity. Alright, so there's 2 trades that I showed you on how I look at the markets, how I analyze the markets. If you found value off of this video, please go like and subscribe, and leave your comments below as well. If there's a certain pair you want me to go through, I am going to do all the pairs as well. The crash 1000s, the boom 500s, and the 300s as well. I am going to do all the pairs. Let me know if there's something specific you want me to go through. Do you want me to go a little bit more in depth on how do I identify which liquidity sweep which market structure shift, which fair value gap or order block I choose, which target do I normally use. If you want me to go in a more in-depth video, leave a comment or a like below and I will do that for you.